Hi, folks. Best-selling author and certified tax specialist, Navi Dowty here. Here's our quote of the week. If you forget the mistakes of the past, you're doomed to repeat them. That, of course, comes from the famous philosopher George Santayana. And are we forgetting the mistakes of the past? I see people all the time quoting statistics of what's happening with the market, things like that. Here's a great one. I had a fellow the other day who told me that every time the market goes down 3 days in a row, 95% of the time, the next day it bounces back up. I said, really? How'd you figure that out? He said, well, I went back 30 years and that's 95% of the time I looked at the data. So I asked him, well, what about the last time, if you went back and looked at when interest rates were going up, what would have happened then? And I hauled out my crystal ball. Now, people tell me all the time they don't have a crystal ball. I'll ask them something, what are you going to do about this or that in retirement? And they'll say, well, I don't have a crystal ball. Well, here, I made a crystal ball. See if you like this crystal ball. I gave a talk to a group of business people a few years ago, and I put this crystal ball out for them. Notice in the first part of this crystal ball, interest rates are going up. The stock market was crashing. You could actually buy stocks here in 1982 for less than the cash they had in the bank. In other words, if a company had $1 billion in the bank, you could buy it for $700 million and you got the company for free. Then we had this long 40-year slide in interest rates. And what happened then? Well, stock market and the bond market skyrocketed. A huge bubble took place. We got up to the highest interest rate in 100 years back in 1982. Now, a couple of years ago, we got down to the lowest interest rate in human history. The real question is what happens next, and why does it matter? Why does this even matter to you? Matters because this directly affects your income that you will have to spend in retirement. In other words, it affects your retirement. If you don't deal with this, then you're betting on your retirement. You're betting your retirement. And we have a normal human tendency to give more weight to recent events. That's one of the reasons why the markets swing so wildly up and down, because what happened most recently is most on our mind. Well, up until this year, we had a 12, 14-year run of the markets really going up pretty consistently. This was coming off from that big crash in 2008, of course. What happens next? That's the question. Nobody knows. You can see predictions every place, but my crystal ball tells you that we're probably more like the first half of this crystal ball than the second half. Doesn't mean that doom is going to occur, the world's going to end. Like I've always said, the world usually only ends once. So it just means that you may allocate your money differently. Most of you who have been watching this channel know that I've been able to manage money for some pretty wealthy people over the years through my untaxable family wealth organization and through my private family office. I can bring those same techniques that we use for those folks down to you, those of you who maybe don't have 15 or 20, 25, 30 million dollars. A lot of people say the wealthy don't pay enough taxes. And the truth is they hire tax planners. You're not going to spend a lot of money hiring tax planners if you're paying less than $50,000 a year in taxes. You can do some, but you're not going to, if you can cut your tax bill in half, that would have a great effect, but you're not going to be able to save $2 million in taxes. Whereas the really wealthy, they can afford to hire people to help them not have to pay excess taxes. We all have to pay our taxes, don't get me wrong. I look at people's tax returns every day, and a lot of people are paying more taxes than they have to, by a lot. So since taxes are your largest expense for almost everybody, it pays to take a look at it. In addition to that, taxes are going up in 3 years, built into the code by 25% for most Americans. So bottom line is, if you'd like to learn more about that and how that might affect you, and how get a copy of my famous Smiling Retiree tax safe taxes checklist, get on a quick call, click the link below, and it'll see if we can help you. We probably can. And those of you who may qualify to be in my private family office, you can also click that link and get on a little bit longer call with us, and we'll see if that would work for you. Oh, and by the way, if you like this content, subscribe to this channel, even if you don't qualify for our private family office, because there are hundreds of tax tips recorded on here and other financial tips. So I'm Navi Dowty, and remember, financial fitness can be beneficial to your wealth.